I have a lot of conversations with people that are looking to get into the business. One of the largest talking points is, how do I find deals? How do I get in? Why can't I find any opportunities? And the challenge that they're finding is they're only looking at the MLS for the most part. Of the last 20 deals I've bought, 19 were off market.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 170. My guest today is returning for the third time. Patrick Spitzley is the owner of Spitzley Group and Shore Homes, and he specializes in buying the worst house in the neighborhood, completely rehabbing it with his team, and putting in high-end student housing. And I'm pleased to have you back in the studio, Patrick. Thanks for being here.
Thanks for having me.
So we have a special topic to talk about today because one of the things that you are very, very good at is finding deals. And most of these deals are off market. And I'd really like to just kind of spend some time talking about that because, as you and I both know, a lot of people, especially those who are starting, are wondering, how do you find good deals? So tell us about some of the deals you've done recently.
Sure. So I have a lot of conversations with people that are looking to get into the business, and one of the largest talking points is, how do I find deals? How do I get in? Why can't I find any opportunities? And the challenge that they're finding is they're only looking at the MLS for the most part. And of the last 10 deals I've bought, maybe one was on the MLS, and I can't even confirm that. So maybe of the last 20 deals I've bought, 19 were off market. So I'm gonna step through a couple of deals here and kind of give the stories on how I found them and what it took to get them closed.
Okay, before you do, let me just give a little context. In the past 2 weeks, you've closed on 4 deals.
Yep, this afternoon I'm closing on the 4th, and it's in about a week and a half span.
And all 4 of these are off market.
Every single one of them.
And then every couple months you're closing on a deal normally.
Correct.
And those deals are off market. And these are single family homes, is that correct?
Single family homes, duplexes, and some vacant land. I'm going to be doing some new builds, so I've been on the prowl for vacant land as well.
Great. So take us through what you got.
Yeah. So I guess the first deal was on the northwest side, a popular area for Grand Valley students. So just another opportunity for student housing.
And by the way, we're in Grand Rapids, Michigan. So northwest side of Grand Rapids.
Yep. This particular deal happened to be an auction property, and the hair on this deal was that the property was occupied, so you could not go into it. That will scare most buyers. And the other piece of it is you of course have to buy it with cash, and then there's the potential that you have to follow through with an eviction or to finish out the foreclosure process. So I was able to go online and find out when the sheriff's sale date was, so I knew when their redemption period had ended. So in the state of Michigan, when something is getting foreclosed on after the sheriff's sale, there's a 6-month redemption period. So after the 6-month redemption period, that's the point at which generally the eviction is complete and the property can be sold or somebody else. That's the point at which somebody else can take possession. So I knew at the end of this auction, it was going to be at about the end of the 6th month of the redemption period. So I had some level of optimism that the owner would no longer be there, because that's a scary part of a all cash deal that you can't get in, is what if you end up with squatters and you end up in a position where you have to get that former tenant or former owner out of the house, and they had a bunch of dogs and a bunch of trash and all of that. So I was optimistic that was going to turn out well. I also own a property very near there that was the same shape and style and year built. So the reason that mattered is I knew what I could do with that home prior to the auction. So I was optimistic that after closing on that, I could make some sort of a play. I could remodel it in some way. I could simply close it and sell it. I think there would have been about a $20,000 payday on it in the event I was willing to close it, get the tenant out, trash it out, and relist it. So that was one of my exit strategies on that. But owning a very similar shape, size, and square footage home hundreds of yards away painted a picture that the interior of this was probably going to be very similar. It might have been the same builder for all I know in 1910. But so I was optimistic it was a quality built house. And that's what gave me the confidence to go ahead and bid on it. So then come auction time, I think I might have been the only bid, which shocked me. This is, wow. I think, the only time it's ever happened in an auction where I was the only bidder.
And this is here in Grand Rapids, where it's a very hot market.
And it was recently. I mean, this was a matter of months ago.
So do you think it's because there was so much hair on the deal? Like the person was still living there, it was in foreclosure, you couldn't get into the house? Was that part of why there were no other bidders?
All of the above. Yep. And I just think there's a lot of fear that comes with not being able to get into a property and potentially having to evict somebody. That's a part of it. That's not a fun part of what we do. So,
but that doesn't scare you though. Why doesn't that scare you?
It does scare me, but I'm okay with it. I think it's a calculated
acceptable fear.
Yeah, it's a calculated risk. I was telling my wife just yesterday, I've closed on 4 deals in the last week and a half here. And after I walk out of the closing of every single one, I've got a certain level of regret and a certain level of buyer's remorse because I recognize now I've got to do something with this. So I've got the hopes and dreams and I've got a plan and a strategy, but then you walk out of that closing and realize I've got to execute this now. So luckily I've got a strong track record of doing it, and most deals have turned out the way that I've hoped that they would. But there's a certain level of responsibility that comes with executing it on the backside. So I think that honestly, a big part of it is just conquering that fear and knowing that it's all going to be okay.
Yeah. So how did it actually turn out with this property?
Yep. So I closed it, and the owner was still there at the day of the close. I connected with the law firm that was doing the eviction, and they had gotten it to a point at which there was a drop dead date for the owner to be out. So I actually just stayed off of it. I didn't present myself as the new owner. I didn't disrupt the tenant. And about once every 3-4 days, I would stop by, I'd just do a drive-by and see if it looked like they were still there. And I think it was about 2 weeks later, they were gone. I approached the neighbor and basically just said, hey, it appears that they're gone, and introduced myself. Because I actually had to break into my own property. I didn't have keys. There was no way of having keys. So I actually crawled in a window, and that's how I took possession. But I first presented that to the neighbor so they didn't call the cops on me. But in speaking with the neighbor, I found out, yes, they had in fact vacated. They had a U-Haul here, 2 days ago, and it was safe for me to enter, essentially.
Okay. What'd you find out when you got in?
It was trashed. It was disgusting.
Congratulations on the purchase of your new home.
That's right.
you get to crawl in the window.
Actually,
it's trash.
Step number 1 was call an exterminator. There were fleas and bugs and roaches, and the electricity had been shut off at the property despite the owner still living there. So the refrigerator, you can imagine what happens to a refrigerator with rotting food and all of that. So I actually wasn't even able to fully walk through the home. It looked like a hoarder type of home with trash everywhere. One of the bedrooms was used for their pizza boxes, just piles of, it was just unbelievable. So I took a bunch of pictures, and I may share those someday, but they're just that disgusting that I don't want to put those out into the world if I can avoid it.
Wow. So what did you do? How do you get started with a property like that?
Yep. So step 1 was call an exterminator, because I literally couldn't send my team. I couldn't even send anybody.
So you can't even trash it out because of the bugs, huh?
Correct. So I sent an exterminator through, and that gave the trash company a 3 to 5 day window through which they could get in. It didn't eliminate all of the bugs, but it minimized them to a point that we could now throw things away. So I got a trash company out there, and they of course trashed it out and got it cleaned up, and that then kind of gives me a fresh starting point. So and that was the point at which I was able to look at it and recognize that I probably was sitting on about a $20,000 payday if I wanted it, in the form of I could list it. So owning a real estate brokerage is handy in that I can list my own properties. I don't tend to sell these very often. I prefer to hold them forever. You work too hard for these. You take, as we spoke about, you take some risks to get a single deal. But the good news was it confirmed my initial thought that I was in a strong position on it. So, and now it's just waiting for my team to get to it.
Are you gonna fix it up and sell it, or are you gonna hang on to this one?
We're gonna do a full remodel, fix it up, and we will end up renting it forever. That's my model nowadays, is to land deals, do large remodels, and rent them. I don't flip much anymore.
So what? Let's go back to the auction. What auction site was this?
I want to say it was Zome.com.
Spell that for us.
Zome.
Zome.com. You found this auction. How much you pick it up for?
I picked up for 52 and some closing costs.
Okay, and how much will you have into it?
Oh man, I'll end up putting $100,000 remodel into it.
Okay, so you're going to put $100,000 on top of the 50 you just
Correct.
You picked it up for. What will it be worth once you do all that?
Probably 175.
Okay, so you got a good little spread there.
Yeah, but not enough. For me, that's not worth chasing. For the amount of energy and time and effort that goes into it to chase that, I guess it's $20,000. But there's way too much work in getting the deal, the remodel. Everything's fully permitted. All the things you deal with the city. There's just a lot of effort that goes into achieving that, and that's why my position is to rent it forever.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. So does the rent income that you're going to be making, does that make it worth it?
Yes,
Okay,
absolutely.
So, talk about that. What will you be able to rent it out for?
It'll be probably I can promise $2,000 a month, upwards of $2,400 a month.
Okay, so you're well above the 1% rule.
That's the goal.
Yeah, good. Well, okay, so that sounds like a real winner there. Again, you found this off market on an auction site, one I've never heard of, by the way. I wonder if that's part of the reason you didn't have any competition.
It could be, but I've bid on homes on that auction site before and gone against 20 bidders before. So
really? Okay.
I think this was just a fluke. I'm not optimistic it'll ever happen again in my life. I've been doing this a lot of years, and I was just shocked to see that nobody was bidding against me. But I think it was because you just couldn't get in the home and you had to take a leap of faith.
Yeah. So let's talk about finding more deals. I mean, you're finding other deals off market. What are some other examples?
Another one, this one's in Easttown, a duplex in Easttown, which I know there's listeners all over the place. Easttown is a great area in GR where a lot of young people are moving to. There's a lot of restaurants and bars and breweries, a great walkable community. I personally lived there right when I got married, and a lot of our product is still in Easttown to this day. So in this particular case, my home insurance agent was the former owner, and I own another property on this street that I was emailing him about getting coverage on. And he just kind of put in his reply, it was a PS, hey, I've got a property on that same street that I need to find a handyman for because I got some violations from the city. Can you recommend a handyman? And my reply to that was, well, yeah, I can, but what are the violations? So he sent me the list of the violations, and I deduced it was a little bit more than handyman level work. You needed probably a licensed builder, and it needed more work than just a handyman. So then I essentially asked him, do you mind if I swing through it? Would you have any interest in selling it? And he replied with, yeah, we would entertain that. So I popped through it and determined it was a property that we could make some sense of. I love owning stuff in Easttown, and they're hard to come by. And in this case, it was a duplex. So I can do more with a duplex than I can a single family. And so I ended up closing on that, and we're actively remodeling it now. It's going to be getting drywall, hopefully, or in the next week or so. Great.
Wow. So the numbers work out pretty well for you on that?
I think so. I'm at the end of the day, yes. I think that'll be about a $3,500 a month rental.
Mm-hmm. Between the two sides?
Yeah, between the two units. And I'll probably end up being $250 to $300 all in. So not great numbers, relative to other deals that I've done. But the consolation prize on this is the location. I really like that location, and I like that community, and the values are still on the rise in that area. They may plateau. Who knows what the market's going to do, but I'm optimistic that I will end up with some equity on the backside of it. And when I'm done with this remodel, I've got enough investors in my phone book that I could probably sell it for $300 to somebody that simply is buying that cash flow and also likes that neighborhood. That's never been my model, but I like to have more than one exit strategy.
Yeah. So it's a good long-term play on that one, it sounds like. Let's analyze that for a second, though. You followed up with the right questions to just a kind of a PS from your insurance agent.
Yeah, and it turned into a deal.
Yeah. So, pulling at those threads can sometimes, unravel some interesting opportunities.
Right. And I'm very tactful in how I do that. I didn't flat out, hey, why don't you just sell it to me? It was, his question to me was, is there a handyman? So I tried to be as helpful as I could, like in achieving what he was looking for. I don't think it was initially his goal to sell it, but once I was able to take a look at it and I recognized the fact that there was more that was going to go into it than, painting a few chipped paint spots on the fascia and other items like that I determined he was probably getting into that deeper than he'd thought. And I think we just got on the phone and I kind of spilled the beans to him on what my thoughts were and what I saw, and tried to paint a realistic picture and basically put the ball in his court. Does it make more sense to pursue this with a larger remodel than I think what he was planning on, or would he rather sell it? And he spoke with his partner, and thankfully for me, the result was, yeah, we'd be willing to sell it. And he picked his number, and we didn't negotiate at all because it worked for me, and it was a number that they needed to be at, and I knew that, and it was a number I was comfortable with.
If you are thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition 5 years ago, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional healthcare insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. All right, so you didn't rake him over the coals on the negotiation.
No, I didn't. And I don't think I could have.
And by the way, you're a broker too, so you have certain rules that you have to follow.
Yep.
When making offers like this. Can you talk about that just a little bit?
Yeah. So in this particular case, and in a lot of my off-market deals, the discussion is always, to some extent, I want you to recognize you could sell this for more if you put it on the market. So in this case, he wasn't really an active seller, and I don't think that he desired to be, but it had some violations. It certainly had some work. It had been vacant for, I don't know the period of time, but some amount of time. So the property wouldn't have shown well. And on top of that, he would have had to have done a certain amount of work just to get it to a point where it makes sense to show it. And what I mean by that is oftentimes these properties simply aren't safe. So you wouldn't want to open it up to the public. I mean, now granted, they're with their representative, their realtor, their agent, so they are safe in a certain way. But there's just certain things that when properties need some love, there's some safety concerns, and there's just other challenges that go with it. And in this case, he knew I was good for it. He knew that I had the cash lined up. Him and I have been doing business for, I don't know, probably 9-10 years. He's insured every property I've ever owned. So he had a certain level of comfort that I was going to close, and he'd seen that I have closed in the past on deals. And so he was comfortable, going down that road with me, and I made him aware you could put this on the market and you could probably net more than selling it to me. But in this case, he wanted the sure thing, and he was comfortable at his number. And I disclosed that I'm a broker. I have him sign something that states they can sell it for more, and they're acknowledging that. And he was just simply more comfortable rather, selling it to me.
Now, was it a quick close? Were you able to close relatively quickly with cash, or did you have to get a loan on this property?
Cash. And yes, it was a quick close. That's I definitely dangle that carrot anytime I buy anything.
You're able to provide a convenience factor because you can say, I can close as soon as you want to, basically.
Right. Versus, hey, why don't you get in there and clean it up, make a couple of repairs? Because if you make $1,000 worth of repairs, oftentimes it can net you $10,000 in the sale price. But the challenge is, in his case, he's great at selling insurance. He doesn't want to go in there and weekend warrior, paint and clean and make it safe and all of that. So once we got down the, hey, would you sell it path, I then say, I can close this in a matter of days. If we can drop a purchase agreement, I can get it to the title company, they can pull title. And as long as everything checks out, we can close this essentially immediately within days.
And psychologically for him, it's like, okay, I don't have to put any more time or effort into this property. Was probably somewhat of an inconvenience for him, especially if it was empty.
Right. Oftentimes these properties are a thorn in the side of those owners, especially once violations are involved and potential safety concerns and all of that. So a cash buyer with a quick close is a beacon of light for them.
Let's talk about the next one.
Yeah. So the next one, I bought from a wholesaler. Actually met her at the RPOA conference. So there's a good plug in the deal room. I've bought a couple of deals in that deal room now.
Good. So by the time this comes out, it will be after the conference in February.
Okay.
But so you met them at the 2018 annual RPOA conference.
Correct. Yep. Right. And basically the deal there was she had bought a house. I think that she actually had intentions of doing something to it herself, because my conversations initially with her were about what I would do and what the rent numbers would look like and all of that. And it kind of evolved to if she could create a spread there that made sense for her and for me, I would just buy it from her and she could take an early cash out on it versus having to put all the work into these things. There's a lot of work that goes into a $100,000 plus remodel. And I don't think that she was as equipped for doing that as we are as a company and as a team. So it was just more attractive for her to wholesale it to me.
Well, it helps that you've got the team in place.
That's the only reason I'm able to do what I do.
Mm-hmm. Yeah, it's not just you calling up contractors, but you actually have a team that you work with all the time. Yeah,
yep. I've got an in-house team that I work with on a daily basis. Happens to be a bunch of my friends, and I'm very blessed and very thankful for it. We actually had a party last night where we had all sorts of fun. So really enjoy going to work with those guys and being able to kind of spend some time and move the financial needle and work toward our goals together.
That's great. So let me see if I have this right. She had this under contract and she flipped it to you, or had she already purchased it and you bought it from her?
She had already purchased it. I don't fully understand the intricacies of how she purchased it. It was something to the effect of they had acquired the note. They had purchased the note, and it may have been a short sale type of situation, so they had to work something out with the bank, and I don't know what those numbers looked like.
So she probably had purchased a non-performing note and ended up taking possession of the property through foreclosure or whatever.
I think she actually knew the person that was living there.
Okay.
So she somehow had a relationship with that person, and she somehow worked out buying the note, et cetera, et cetera. I don't know the intricacies of it.
Okay. So were you able to get a good deal on that one?
Not a great deal, but I'm happy with getting deals, especially in the neighborhoods in which I operate. This will be another one that I don't think my number is going to be great on. I don't love it, but in my real estate investing career, I've hit a lot of home runs and a lot of triples. So we've built a company on home runs and triples, and I keep in my talks with fellow investor friends, I've recognized that the occasional double and maybe even a single is acceptable. I don't want to be putting myself in a bad situation with that in the event of an economic downturn or something not going right. But in my career, I have been excessively conservative. There's a lot of deals that I've passed on that I look back at and I go, oh man, I should have bought that deal. And now that we're at a size, we're a large enough size that I'm insulated from a single deal going bad. So in the event this one doesn't go bad, I'm not going to get hurt that bad. It's not going to be crippling for the company. So that insulation is what affords me attempting some, triples, doubles, and singles versus all home runs.
But for what you paid for it and put into it, and what you'll be able to get in rent, does it make sense from that perspective?
Yeah, I like it. And I think that if you extrapolate it over the 20, 30, 40 years that I'm going to own it, and after that large remodel, essentially everything is new. It's still an old home, but it feels as though it's new. New systems, electric, plumbing, HVAC, drywall, trim, doors, stainless, wood floors. The likelihood of having maintenance expenses eat me alive is very low for, we'll say, the first 10 years. But even after 10 years, a lot of those systems are still going to work great. Maybe I need to do a new furnace, but I will never again redo all the ductwork. I will never again need to redo all of the electrical. So I will achieve some benefits on those for a long period of time. So the theory here is that I will be able to collect top dollar rent on this thing and let's say after 8 or 10 years, I've got all my money back. And after that, I'm kind of free rolling. Now that's not proper math. I know that, but that's kind of the way that I think about it. So in theory, after 10 years, I won't have $1 into this thing anymore. I'll probably have it debt free if I don't leverage on it. And all the while, I'll be able to continue collecting rent for as long as I choose to.
Okay. Will you take out a loan on this property?
I'll end up with an end loan on it.
Mm-hmm. So you were able to purchase it with cash, and I know you work with investors, so you're able to kind of raise the cash from investors for the acquisition and the rehab. But then you pay the investors back and refinance with a 30-year fixed. Is that kind of how you do it?
Yeah, I won't get into the weeds too much about that, but because I've now closed out all of my availability of 30-year fixed loans, so I'm shifting into the commercial market now.
Oh, okay.
Yeah, so we've my wife and I have maximized all the lending that we can get in that in the conventional 30-year amortization fixed world. So now I'm shifting into the commercial lending, and I'm probably going to do more portfolio loans. I think the still digesting this and figuring out what makes sense, but I think I'm going to pool every year. Whatever we've created in a year, I'm going to go to a commercial bank. We'll take a portfolio loan, meaning it's cross collateralized with all the other assets in that loan, which in my case will be 4 to 8 properties. So in a given year, we're going to, at least in this capacity, in this business model, there's other hats I wear too, but in what we're doing with the single family duplex 4-unit game, I want to create 2 to 8 house portfolios and then get end loans, probably once a year is what it's going to shape up to look like.
Right. So it's important to note that even though you've maxed out the number of residential loans that you and your wife can get, there's still other options out there.
Absolutely.
You haven't hit a wall and you can't get past it. There's other options. But I want to get back to finding the deals, because we've got an auction property that you found, one that you got through a professional relationship with your insurance broker, one that you found through networking at the RPOA annual conference. What was the next one?
So the next one is another wholesaler. And in this case, I was sitting around, not sitting around, I was in my office probably about 2 months ago, and I just shot off a bunch of emails to all the wholesalers that I've done work with over the years. There's some that I haven't worked with, but they're aware of who I am and that I'm a serious buyer in this. And basically said, hey, you got checking in, how are you doing? You got anything? And of the 10 emails I sent, I think I got 10 no's. I got 10 replies with, no, I don't have anything, sorry. One of them said, I've moved my business to Detroit and Cincinnati, not really doing anything in GR. Another one has physically moved to Detroit, so he wasn't even in the market anymore. So I got a bunch of no's. And then I'll be darned if 2 days later I got an email basically saying, hey, I've got one on Fuller. So Fuller is a street that runs north and south through East Town, a great area that we own a lot of property in. We actually own 6 units on Fuller currently, so this one's our 7th. So I understand the rental market there, and I understand that community well. And so, about 2 days later, she said, hey, I've got this potential deal. Do you want to take a look? And she gave me the numbers on it, and I attempted to go through it. There wasn't a key there, and I basically shot the deal down just by doing a lap around the outside. And
shot it down. You didn't like what you saw?
Correct. So I pretty quickly replied with I don't have interest at that number. It's just not going to work. Shop it to your other investors, and in the event that they're willing to take something considerably less, please let me know. Circle back and let me know. And that's kind of where I left it. And I figured it was a dead deal. And then about 2 weeks later, I got an email that said they'll consider $10,000 more. $10,000 or more less than what they were originally asking. Would you have interest? So at that point, I got more serious about actually getting inside of the home. And in this particular case, I got a hold of my construction manager. He's the guy that tells me if I'm being smart or stupid on these deals, because he comes in with a much more objective eye and no emotions involved, or at least less emotion involved. He's much better at not falling in love with the deals than I am. And I basically said, hey, talk me out of this. Keep me from doing something stupid right now, because I think I have to buy this deal. So him and I went through it.
Hold me back. Hold me back.
Precisely. I wanted him to tell me, no, don't do this. He walked through it and he looked at me and said, no, I think we got to buy it. This is what we do for a living. These are the projects that we're good at, and we're going to be able to make sense of it. And in the location in which it sits, it's walkable to the restaurant and breweries and all that.
Was it occupied at the time?
No, it's in rough shape. So
What was your problem with it? Why didn't you like it?
the short answer is it's small. It's right on a busy street, and it was a funky lot. So I had a fear that the house and or the garage were actually on the neighbor's land. So in the negotiation of this, I put in a contingency, which I never put, almost never do I put contingencies in any of these. It's generally cash, quick close, let's go. In this case, I basically said I had to get a survey to confirm the house and the garage were actually on the lot that I was buying. Because there's about a 12-foot discrepancy. When I looked at the GIS, the mapping online, the house was decidedly in the neighbor's yard, as was the garage. And if I looked it up online, it showed the lot as being 33 feet wide, and the house itself is 32 feet wide. So it wasn't looking pretty. I wasn't optimistic. So paid for an actual survey to get done. I found out that the lot is actually 45 feet wide. So a 12-foot typo, I for a lack of a better term, and I found out that the house and the garage were, fully on my lot. So that that then gave me some level of comfort to proceed, and so we did. And you asked the condition of the home. It hadn't been gutted, but effectively it was essentially gutted. So when you walk in, the flooring is gone. I mean, it was floor joists that they have some chunks of OSB laying over.
So it had already been gutted for you.
Yeah, it's missing all the electrical, all the HVAC, all the plumbing. It's missing all of those items. But with my model, they're helping me. That actually saves me money.
You do that quite often anyway.
That's exactly what I'm going to do to the house anyway.
So what's the numbers on that? What'd you pick it up for, and what are you going to put into it?
It was initially offered for $50,000, which in that neighborhood you still don't find much listed for $50,000. But I still didn't like it at that. So I knew that I wasn't going to be a buyer at 50, and I was optimistic they would be able to find a buyer. I'm okay with other people getting deals if they're comfortable paying more than me. So there's no pride there. I don't chase these things just to chase them and keep them from others. If somebody wanted to pay 50 and they could make sense at that number, great. So after giving it a couple of weeks, they couldn't find a buyer. And essentially it was 38 was the price to the seller, and then there was an assignment fee on top of that. So it ended up getting me into the 40s, the low 40s, which is actually stretching it. So I was hoping to be a bit less than that, but when my logical self kicked in, I recognized the neighborhood it was in, what we're going to be able to do with it. Paying a couple grand more than what I was initially comfortable with still made sense because I have to land deals.
At the end of the day, a couple $1,000s isn't going to make or break you.
Right. And the name of the game is landing deals. So I can't trip over a couple grand and miss out on opportunities, especially if it's something that I'm optimistic I can make some sense of.
So is this another rehab and then rent it out kind of situation?
Exactly. Yep. We'll do a large remodel. I'll probably end up putting a dormer on the second story to be able to put a bathroom upstairs. It's got some lower clearance on the headroom because of how the roof line was built. So in putting a dormer in and ripping off a section of the roof, essentially, it'll gain me some headroom. I'll be able to put a bathroom on the second story, which will give me a couple of bedrooms and a bathroom up there. And then I'll be able to make something happen with the main floor. I've got enough square footage that I'm optimistic it'll work. I don't fully have a plan developed at this point, but it's got enough square footage and I like the location enough that I'm sure we can make something work.
So how many bedroom and bathrooms were there, and how many are there going to be after you're done?
I honestly am uncertain how many there were. It's a goofy, chopped up house, so I think the short answer to your question might be 3. I think it was probably a 3-1.
Maybe if you use a lot of imagination.
Yeah, I mean, so when I go in, I look at it through the eyes of what I'm going to do to it. So I didn't much care that it was probably a 3-1 at the time, and it certainly doesn't have a bathroom on that second story, which is a turnoff for buyers and tenants. Nobody wants to live in the second story and walk down the stairs to find the bathroom. So knowing I could add that bathroom upstairs changed the game a little bit. And when I'm done with it, it'll end up being a 4-2, so a 4-bed, 2 full bath.
4 real bedrooms.
Correct.
And 2 bathrooms. Nice. So you'll add a lot of value to that.
That's the hope.
Yeah. What do you think that'll rent for?
Probably $1,800 to $2,000 a month.
Okay. And what do you have into it then, or will you have into it?
I'm gonna guess that'll be an $80,000 to $100,000 remodel. So the math, I'll probably be $120,000 to $140,000 all in.
So you still be well over that 1%. You're closer to like the 1.5%.
Yeah,
rule.
I like using the 2% rule. And if I use the 2% rule, I can allow for a lot of things to go wrong. And like you just said, if I end up at the 1.5% rule, I'm still doing okay.
Yeah. So, but that's good because that was a wholesaler who brought that to you. Another way.
One that turned me down too.
Yeah. So first they said, well, I don't have anything. And then they came back 2 days later.
Right.
So it didn't hurt to ask because it puts you on the radar.
Yeah. And the moral of the story there is just, and it doesn't hurt to send an email.
Yeah.
I mean, it's an easy enough thing to do. And once every 6 months, I'll send an email to those people and just check in, and it keeps me on their radar.
Yeah. I'm sure wholesalers have a lot of people who want their lists, and it helps to remind them, hey, put me back near the top of your list because I'm a buyer. I'm ready to go.
And I think that the value that we bring to a wholesaler is, I've bought over 100 deals in my career, and I don't even know what the number is. There's yet to be a deal that I haven't closed on. So I think once you get into this and people start recognizing that you're closing deals and you've hopefully got a good reputation around town, they're confident that their deals are going to close. And that is what's important. A wholesaler works hard to get that contract, and they want to assign that contract to somebody that they know is going to follow through. Because I shouldn't say that they're on thin ice with that with that seller rather, but they have to be confident that they're bringing it to a buyer that can close. And I've always prided myself on being that guy that can and will close. And I will reach out to my private money well before signing any of my purchase agreements, just to ensure that I'm going to have the capital available if I don't already have it to close on that. It's just that important to me that I'm closing on deals and executing these as I say I will.
Have you ever closed on something that as you were doing it, you realized, I probably shouldn't be closing on this?
Oh, yeah. I can't definitively say that I've really fully messed up and I've lost a bunch of money, but like I mentioned earlier, that buyer's remorse kicks in every single time. So to all the rookies out there, if you're not nervous, you're probably doing it wrong. I think that nervousness is a healthy level of fear, but it kind of forces me to execute and gives me a little motivation to make it work.
True. So what else you got for us?
We'll skip to, I'm closing on a deal actually this afternoon in a couple hours here. And this was a unique deal where it was brought to me by somebody that knows I'm in real estate. It needs some work. There's multiple exit strategies on this, and I'm optimistic it's going to be able to work out. So the general understanding here is that the current owner, as of now, in 2 hours, I will be the current owner. But as of now, she isn't in a strong position on it in that she has a lot of debt on it. It needs enough work that she was intimidated to put it on the market. And I think that part of her challenge is there's a certain level of, I don't know if embarrassment's the right word, but people don't like exposing their personal life to the public if they can avoid it. So in her case...
So this is the homeowner living in the home who probably is averse to having people potential buyers walk through and kind of judge the condition of the home is.
Correct. And on top of that, she would do well on this if she could have it cleaned out, make some minor repairs. It's got some peeling paint, a dated electrical box, some other items that'll make it probably not financeable by an FHA mortgage lender rather. So if she were to address those things, she'd be able to expose it to a large pool of buyers. And
so as a broker, what did you have to tell her before you got this under contract?
Well, number one, I tell her that I am a broker. Mm-hmm. And the way I approached this was I actually walked in with the intent of trying to steer her toward what it would take to sell it for, not top dollar, but to sell it so that she could get some equity out of the deal, so that she could sell it for more than she's selling it to me. So my initial coaching was, all right, let's declutter the place. And it has a lot of stuff there. So there's no two ways about it. She's very clean though. So it's boxed up and organized, but there's so much stuff you actually have a hard time walking through it. So if I were to put my brokerage sign in that yard and list it on the MLS, I'd have a really hard time having clean showings and having people being able to envision their couch there and sleeping there and raising their kids in that backyard and all that, simply because of the amount of stuff. The seller wasn't in a position to really clean all that up, and she needed some motivation. So I essentially said to her, you could sell this for probably about 20 grand more if you did, these minor things. So I kind of made a little list of things, and certainly a large part of it was clean it out. And I actually backed off the deal for a couple of months because she had some other potential interested buyers at a higher dollar amount. So I actually kind of went dark on her, and I called her up about 2 months later just to see if she got it done. And my angle there was not necessarily that I wanted to buy it. I wanted to follow up on something that I'd kind of advised on, and I wanted to hear the success story of she cleaned it out and got it sold and moved on and everybody's happy. But she essentially said, no, that person went dark on her and they just didn't respond with a number. And I again said, well, if you want to clean it out, we can get this thing listed and on the market. And she just didn't want to do that. And I said, well, I'd be willing to buy it potentially, but you've got to be aware that it's worth more than what I'm going to pay. I am not the guy that's going to pay top dollar for it, and you can do better on it. And her reply was, I'm okay with that. I'd rather have the surety of closing this and the surety of getting of essentially getting out of this deal without exposing it to the market, without cleaning it up, without doing those other things that she didn't have the appetite for. So all of a sudden I became a more reasonable option, I guess, maybe the easier way out. And again, it was a cash offer and I put the close on her. I told her I could close in 3 days. We could close in a month. What makes sense for you? Because she's got to move out of the property. And I think, again, that's another little piece of not negotiation, but of incentive that I gave her. You can drive the ship here. I don't have to do this quick. I don't have to do this slow. What makes sense for you and your situation? And that was part of what helped her to make it make sense to sell it to me. And so we're closing on this in a few hours, and she's just about got all her stuff out of there. I'm sure I'm going to be left with some things I've got to take care of, but that's part of buying and selling real estate.
Yeah. So it sounds like from her perspective, there was sort of a motivation and a risk aversion process going on, because she wasn't necessarily motivated to do the cleanup or the work that needed to be done to get the higher amount. But there was also the risk that if she did do that, she still wouldn't get the higher amount. So she wanted the certainty of what you were willing to offer her, knowing that you would be able to close and follow through.
Right.
Yeah. So, and that's a contact that came through just someone who knew that you were in real estate. My
neighbor's mother. So essentially I called her grandma growing up, called me up randomly. I saw that she called. I missed her call and left a message basically saying, hey, a friend of mine has a daughter who has a home that needs a lot of work, and I know you buy houses.
That's great.
Give her a call.
Yeah. And not only did you call her, try to help her out and give her advice, but you followed up 2 months later after the deal was kind of dead, probably in your mind. So
I was hoping it was dead. I wanted her to be able to sell it for more to the other interested party.
So just that act of following up and remembering to follow up, that was important there, because had you not done that, you would not be closing on it this afternoon.
Right.
Yeah. So let's talk a little bit about just the psychology of a seller. I mean, have you bought from a lot of homeowners in similar situations?
Yeah.
What do you typically find from their standpoint? What's going through the seller's mind when they're willing to sell it to you at a lower price than what they could get if they were to put it on the market?
I think a large part of it is convenience and a surety that they're going to be done with this problem. So I won't get too far into the weeds on another house, but one in particular comes to mind. It's in East Town. The owners of it lived 3-4 houses away, just around the corner. The particular home that I bought had a hole in the roof, and the previous tenant had left all their stuff. So the seller had a bad experience with the tenants that they'd had living in there, and they'd neglected the property and had been sitting for years. So when I approached them about selling it to me and kind of shared with them what my business is and the reason that this makes sense for me, they took a lot of comfort in knowing that they didn't have to trash it out. They didn't have to actually put it on the market. It wasn't really safe for people to walk through. So I was the only guy that walked through it, and they liked that. I built a bit of a relationship with them. They were optimistic that I was a man of my word and that I was going to follow through on what I said I would do, which of course I did. I'm buying the home and I own it to this day. So as for the psychology, I think that there's a certain level of convenience, and there's a certain level of fear that goes into when they are selling it. For example, with the one I just mentioned, they didn't want to put a new roof on it. Could they have sold it for $10,000 more with a new roof? Yes. Did they have $10,000 in cash sitting around where they could afford to put the roof on, pay that company, et cetera, et cetera? So there's a whole ball of wax that you get into once you start actively rehabbing these. No utilities were on. How do you show a home in the winter when it's below 32 degrees, all the pipes are frozen and bursting? How do you sell that for top dollar? The answer more likely is you can't and you don't. So when I come in and I approach these things, I give them a level of comfort that I'm a cash buyer. This is what I do for a living. I'm okay with whatever we unearth. I'm willing to sign something saying that I'm buying it as is with all its warts and everything that comes with it. And there's on their side of it, they then aren't going to have to do anything. They aren't going to have to deal with this again. In that case, that'd have been a thorn in their side for 5-6 years. And they didn't like living 3-4 houses from it and knowing what was going on there and the potential vandalism it attracted. And there was a rotten fridge again in this one, and it was disgusting. And once I closed on it and my team got on it, we made it all beautiful and it makes the neighborhood nicer. And I'm sure they'd probably walk by it to this day and enjoy looking at it now versus being, bringing up a lot of bad memories in a past that they don't want to dwell on.
So have you ever bought a house? I mean, I know that you say, okay, you're ready and willing to accept whatever condition it's in. Have you ever found a house that was in such a bad condition that you said, oh, I can't touch this?
Yes and no. I find a lot of houses that are in a bad condition at a high price. So those are the ones that I pass on often. I will mark those and I'll remember them and I'll circle back. But generally, by the time I circle back, they're pending or sold. So there's
someone bought it.
So somebody else bought it. Yeah, which honestly affirms that I'm getting good deals. Because if I passed on that, I'm being more conservative than whomever it is that bought that. So it gives me some level of confidence on the ones that I do close and have closed that I'm in a strong position. We've bought some train wrecks. I've bought a bunch of fire homes. So homes that have had fires and dang near burnt to the ground. And some people view as we just need to bring in a bulldozer. In those instances, we've ripped off the roof and put trusses on or reframed. We've removed everything that's charred, kind of started over with the home. But I bought those at such a price that it made sense to do those things. So in that case, the answer is no. There's nothing that scares me so much that we can't repair it. We've repaired foundations. And
what about surprises that may have happened once you buy a home and you get into it and you're like, oh my God, I didn't realize that this was...
Oh yeah, we've run into a bunch of surprises, but generally I've got enough margin on these and enough fluff that I can absorb a certain amount of that. And when you're viewing it from a long-term rental standpoint versus what's the end value of this home the day I complete it, it's a different lens through which you look at things. So I gave a couple of examples of, a duplex in Easttown, another one I bought from a wholesaler. My numbers are not going to be attractive on that day one. But if I'm going to sit on this and collect rent for 10, 20, 30, 40 years, as long as the rental number makes sense relative to the amount of capital I've invested, I'm not terribly concerned about the end value. Now that makes me sound like a rookie real estate investor because it goes against all conventional wisdom. You want to be $75,000 into something that's worth $100. How dare you be $110 into something that's only worth $100? And to that I would say, if I can get $2,000 a month in income, and it cost me $110,000 to get that, I don't care that the house is only worth $100 because on my time horizon right now, I'm not going to be selling these anytime soon. I have some room for appreciation in these neighborhoods, and I'm optimistic that by the time I'm at a point where I have to have a liquidation event, that I've probably collected all my money anyway, and I could donate the house for all I care at that point. So that the current value of the home plays less of a role. Now, I'm not stupid about it. I'm not going to be $500,000 into something that's worth $100. But at the end of the day, if I can get strong rent numbers out of it, I discount how much how important the end value of the home is to me. I mean, the comparable sales approach, essentially. Mm-hmm.
Yeah. So your considerations are a little bit more conservative and patient.
Exactly.
Mm-hmm. So I know you talk to a lot of investors, and a lot of them want to know, how are you finding your deals? I think you've done a great job just giving us examples of how you're finding your deals. What is some of the advice you have for those investors out there who are looking for deals, pounding the pavement, making the phone calls, but still coming up with very little to show for it?
Two thoughts there. I think that a lot of people that haven't done this before are too conservative. I mentioned earlier, there's a lot of deals I've passed on. So I have a certain level of conservatism that has disabled me from buying a lot of properties. I would own a lot more of Easttown if I would have been smart 8 years ago when everything was on sale for 30, 40 grand. What I'm paying $100,000 for today, I could have gotten for 60 grand less just a matter of years ago. And I think that if you haven't done this before, you tend to err on the side of conservative. And I think that there's a lot of analysis paralysis. People they run all their numbers, but they build in so many what if scenarios. What if this? What if this? What if this? And that's okay. That's a good thing. But the odds of every one of those things going bad are actually quite small. And I always combat that with, well, what if the market goes up? What if the house is worth $10,000 more next year? What if your rent rate is actually $200 higher than you thought? So you got to balance those what ifs, both the pros and the cons. And at the end of the day, I think that more deals make sense than what people are evaluating. That said, they might not be evaluating enough deals. So I think I walked through about 20 homes to buy one. A lot of the homes that I walk through and I don't buy are in fact on the MLS, and I still like walking through them. It keeps my thumb on the pulse of what things are trading for and where the market's at. And then I can follow that, see what it closed for. Again, it gives me assurance that my deals are good deals that I've closed on. It gives me some level of confidence. But I just think that people are generally conservative. The other thing that I hear a lot is, I don't have the money. I don't have the money. What do? I don't have money. Should I start in wholesaling? And my response to that is, sure, I'd love to have more wholesalers in my phone book that are calling me and wanting to, bird dog deals and view me as a strong buyer and bring them to my attention. But I met with a banker. He was a childhood friend of my family's growing up. I met with him right when I first got into this, and his word of advice to me was, find deals and there will be money. And what he meant by that is, if you can find an opportunity that is in fact a deal and you're not fooling anybody with that, there will be money, whether it's private money, whether it's mom and dad or with a home equity loan, et cetera, you're going to find money. And if you're able to get a deal under contract that is in fact a deal, and there is in fact a $20,000 payday on the back side of that, there will be somebody that would fund it. I would fund it. I mean, I have some capital that if somebody was bringing a deal to me that made sense and there was skin in the game for them and it was something that made sense for me, I would fund it. And I'm not a hard money lender. So my point is, there are people out there that can lend money like that. There's banks that have money. There's a lot of ways to get the money to close these. So people like to view it as, I have to have all my own money. I've got to have everything all ready before going into it. And to that I say, no, find deals. Step number one is find deals. And from there you can have success. You can find something to do with it. The worst case scenario on that is you don't execute and you lose $1,000 earnest money deposit. I've had a lot of deals I've bought without earnest money deposits. So I've had no risk. I've got these under contract. The one this afternoon, there's no earnest money deposit. So in the event that I just don't show up at the closing, which of course isn't my intention, I've got the cashier's check in my truck, but there's no risk there. The risk is that this lady has been moving her stuff. So there's certainly that side, and I'm respectful of that side, but you can work these in such a way that you're not going to get hurt. So why would we delay? Why would we wait for the perfect deal to come across, or for this great opportunity? Or I've got to continue working my 9 to 5, making $10 an hour for 10 years so that I can save up 50 grand to buy that one house from that wholesaler. And my thought has always been, if it's in fact a deal, there's going to be money. You can find that money.
Great advice. Any parting thoughts or other advice for our listeners before we wrap it up here?
To summarize all this conversation, you just got to get out and do something. At the end of the day, if you're sitting at home and analyzing stuff that's on the MLS and not creating relationships, not talking to the people that are doing this, not knocking on doors. I've bought homes by knocking on doors because it looked like it needed a roof. And I actually bought one from Europe, and I won't get into that too much, but it needed a roof, and he called me and wanted to sell it to me. So my point there is, you just got to do it. You got to get out and do it. It's uncomfortable. It's not easy. You're going to be told no a lot. But at the end of the day, the only way that I'm landing any of these deals is by shaking those bushes and hoping something falls out of them.
All right. Fantastic. Well, Patrick, I really appreciate you taking the time to tell us about how you're finding deals. I mean, you have a good pipeline, and it's coming from all directions. There's no one way that you're finding deals. It's just getting out there and talking to people and creating relationships and helping people in the process. So thank you very much for taking the time to tell us about all of this, and good luck finding more deals. I'll look forward to having another conversation with you sometime soon, and we can find out all the new things you're up to.
Yeah, thanks for having me on. It's fun.
This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.